Welcome back. It's time now to take a look at the top business stories. French business group to play key role in Abu Dhabi's 2030 vision. Stability key to success for regional free zones. And Apple overtakes Google as most valuable brand in the world. Let's look at the UAE stock markets first. The DFM and ADX both ended lower today. The DFM General Index lost 0.2% to close at 1,588 points. Best performer was jewellery maker Damas, which surged over 11%, followed by insurance group Takaful Emirate, which gained 4.5%. Union Properties was up 2.3%. DU rose 0.6%. And Dubai Islamic Insurance gained 0.8%. Largest loser, however, was Global Investment House, which fell nearly 10%. 80 million shares were traded, valued at 115 million dirhams. And over in the capital, the ADX fell 0.4% to close the day at 2,675 points. Alder Properties lost 3.2%. Zuru Real Estate dropped 1.4%. Dana Gas was down 1.5% and Taka fell 0.7%. Biggest loser, however, was Emirates Insurance Company, which lost 9.9%. 68 million shares were traded today, valued at 118 million dirhams. And let's now have a look at the GCC markets, which ended mixed today. Let's take a look at the currency markets. In a trading week littered with events of high risk, the US dollar staged a rally which saw it gain more than 3.5% against the euro in merely 2 days of trading. To discuss the euro and the dollar further, we are now joined by Gaurav Kashyap, head of DGCX trading at Alpari Middle East DMCC. Welcome, Gaurav.
Glad to be here.
Good to have you on the show. Now tell us, we saw the dollar rally. How much of that is caused by the better than expected US non-farm payroll data?
Well, surprisingly, Linda, not too much, because a lot of the dollar strength that we encountered starting from Thursday was well before the NFP number was released. And actually the trigger in dollar strength was as a result of Trichet's very dovish comments. We do know, and the markets largely expected the ECB to hold rates unchanged at 1.25%, but it was his dovish sentiments regarding future rate hikes and a possible that they will not be hiking rates in June or maybe as early as July is what really caught Euro bulls off guard, and which is really what accelerated the sell-off. Then, of course, we had on Friday, we had a lot of negative data coming out of Greece. There was a German magazine called Der Spiegel, if I'm pronouncing it correctly,
Der Spiegel, richtig.
which actually said that there were some rumors that Greece would be looking to exit from the EU, which was once again very quickly negated and cancelled by the EU officials. So it's actually a lesson that we take from this non-farm payroll, this particular release, that, you know, even though we had a sparkling number which showed 244,000 jobs were added compared to last month when 211,000 jobs were added, the risk sentiment really wasn't able to reverse itself on that good news. And as a result, the dollar really didn't rally on that, and it continued, strengthening.
So let's look at crude oil a bit more. It lost 13% last week. And silver lost even 25% on the week. Why was that?
Well, there was a horror show for the commodities. It wasn't only limited to silver and crude. It did affect gold to some extent, although not as much as silver, which was the biggest loser on the week. Look, actually, when we had the rate decision on Thursday by the ECB, a lot of the money was... a lot of the market is moving actually on interest rate differentials for the time being. And with this dovish sentiment by the ECB, a lot of those Euro bulls exited their positions and moved into US dollar. So the very fact that the US dollar index was able to rise from the grave and move up to 75 levels is what led to this aggressive sell-off in commodities. But on a positive note, looking at trading today, the markets have commodity markets have recovered and are moving in a higher range.
Thank you very much for coming in today. See you next week.
See you next week.
And now to our top stories. The French business group is to play a key role in promoting Abu Dhabi's Development Vision 2030. A recent conference brought together 270 business leaders and delegates from the Abu Dhabi Department of Economic Development to discuss the Emirates' vision and development opportunities. Speakers stated that the diversification of the economy, the employment of nationals, and the development of leadership positions in key sectors are some of the main priorities for the vision, which they say will triple the country's GDP by 2030. The French Business Group president said that French companies can help advance the Emirates' vision in areas such as renewable energy, aviation, aerospace, tourism, retail and luxury, among others, and will be a key partner for its vision. Economic stability, incentives and specialization are the main reasons behind the success of the Gulf region's free zones. A study on the Arab free zones by Forbes Middle East magazine highlighted the importance the zones play in promoting investments. The UAE has 30 free zones, of which 20 have been observed by the magazine. The more a zone contributes to the overall GDP, the higher Forbes ranks its importance. And in our fast financial news, Abu Dhabi's oil refiner Taqurir is looking to more than double the capacity of its Ruwais refinery to 900,000 barrels per day by the end of 2013. The refinery is run by Abu Dhabi National Oil Company and its current capacity stands at 415,000 barrels per day. The Dubai Financial Market, the only Gulf Arab stock market to sell shares to the public, posted a first quarter net profit of 2.2 million dirhams. It didn't give comparative numbers for the year earlier period. First quarter trading volumes dropped to a daily average of 116 million from 235 million in the year earlier period. And after the break, we will run you through what's making the headlines in international business today.